Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, October the 9th. My name is Eric Wilkinson, and yes, you might recognize me from mainstream media as the Wolfman. But what I'm here to do is teach you guys option strategies, and most importantly, how to implement those strategies into your portfolio. Why? Because implementation is the key to success here. I talk about environment and what we need in order to implement a specific option strategy for your directional assumption, whether it's bullish, bearish, or maybe even sideways. There's a lot of opportunity out there to take advantage of. Now, having said that, I don't know if right now, this week, or these next couple of days is the time to really start adding to our portfolios some of these option strategies. For one, we have earnings right around the corner, and two, as you've noticed, every single day it is some news about these trade talks with China, whether it's even some of the negative aspects of the NBA and China's deals. That's been driving some sentiment and volatility into the market, believe it or not. And today we've got a flip side where there's some people saying that trade talks with China are looking a little bit more positive. And what do we have? We have the market go from only up about 50, 60 points on the day to up over 200 in the Dow. So we've got to be really patient right now, keeping our eye on the economic data here in the United States and really kind of let this stuff work out. And we'll go into detail with when we pull up the charts and stuff like that. But let's get over to the economic data. We do have Eurogroup meetings going on today. That is going to be a market mover. It already has done some of it. It's all, or some of that information has already come out and been positive for the most part. All right, but in the United States, we got wholesale inventories coming off a little bit, only 0.2% increase. It was expected to be a 0.4% increase, so that is good. You know, we want to see these guys moving inventories. That shows that the consumer is out there buying. Also, we got job openings from JOLTS, and that came in at 7 million. Job openings expected to be 7.35 million. So not as many people looking to hire. That could be a product of some of these purchasing managers. Remember in the ISM, we saw some of that waning a little bit. Those jobs might not be opening quite as fast. Now, also, remember, I've been talking about this for several months now, that I think the economy is on a good trajectory. We're talking about the not robust boom and bust that we've seen in the past, and that's what's allowed us to stay out of a recession for one of the longer periods of times, over 10 years. Usually we see a recession within 10 years of the last recession, and we're past that now. A lot of people are saying that it's looming, and it doesn't necessarily have to be that way. If we have an economy that is trudging along in positive territory, like I've been mentioning, that is good, because then we don't have those booms and busts. All right, anyway, enough about that. Crude oil inventories went a little bit higher today. Almost 3 million barrel build, expected to be 1.8 million barrel build. So there's still that inventory starting to increase. We've been seeing a lot of that happen. Oil has come off a little bit today. We're see that build, and we're still seeing the market go higher, mostly due to the idea that if these trade talks work out, then the global economies will start turning around. I don't think that that's necessarily the case. I think that oil is priced in right about where we should, like I've said time and time again, somewhere in between that $55 a barrel and $50 a barrel, which is right where we've been. And the equities are also in line with where I've been talking about as well. So, we've come down and tested that lower 50 area, 55-ish, just slightly higher than that is the point of control. And I've talked about, I think that we are going to bounce in and around this area, which would then fill in all of this, creating a bigger volume node. So that is still the case as far as I'm concerned, especially with this build again today. That is going to cause a little bit of overhead pressure in crude oil and not really allow it to spike too far out of the range that I've been talking about recently. All right, let's move over to gold futures. They are in positive territory by about $8 right now. Yesterday, we were able to hold above that a barrel or 15 troy ounce area. That's lining up right here that we've talked about as well. $1,500. We did test it, obviously, but that's line right there. A settlement above that was positive, and today we're moving a little bit higher. I don't expect gold to break below that 1,500 mark right there. I expect us to continue to try and move a little bit higher. We're going to start accepting volume or accepting price at that level above 1,500 a troy ounce, and especially with the Fed, the way that they're talking, they're continuing to talk about lower interest rates. Some people are saying quantitative easing, 7, 8, 9, 10, wherever we are with that quantitative easing. I don't think that they're going to actually start doing that. The banks are doing okay as far as I can see. There's no real systemic risk going on. They aren't going to outperform anybody by any stretch of the imagination, especially if we start lowering interest rates. But that is the overall economy is doing all right, and I don't think that the banks are at any major risk. We got the bonds moving off by almost a point right now, as you can see here, down almost 30 ticks. Remember, 32 ticks is a full basis point. We aren't quite there yet. I don't think that this is going to be an engulfing pattern to give us any indication that the market is going to want to roll over to the downside. I think that is out of the question because we are going to continue to talk about interest rates that are going to move sideways. So I think that the market is going to kind of trudge along in that kind of direction, really, at this point. I haven't seen any Fed governors talk about raising interest rates, which I think is out the window at this point, but a lot of them are starting to move to the camp of maybe lowering interest rates by another quarter of a point. So that would hold bonds up a little bit. This is what I'm talking about with the Dow Jones up almost 200 points on the day. You can see we opened up in positive territory. It was up about maybe 70 or 80 points. And then when we started hearing some of that news come out of China that the trade talks were going very well, or that China was looking to come back to the table. Remember, I think that these tariffs are hurting China more than it's hurting us. I was not a believer in the tariffs at all, but it's kind of shown that it hasn't really hurt the United States as much as it's hurt the broader European and Middle East areas. So I think that we are going to continue to trudge. Like I said, I don't know that we're going to see those all-time highs like I was talking about a few weeks ago anytime in the near future. But with the economic data coming out in the United States, it's not looking too bad. And China is not looking as bad as it was before, but still not looking all that great. And I think that they are going to want to have they have more of an incentive to get off these tariffs before the holiday season, and as most of our products are going to be coming in from them, we're going to be a net buyer anyway. But if those prices start moving too much higher, then it is really going to limit what their upside is. All right, anyway, we've got the NASDAQ up almost 80 points, just slightly off the high, but right back to the point of control and above, well, and below, as we pop above and below that 7,000 mark, which lines up with our point of control. We can just call it right there. That is pretty much what it is. Slightly higher. This is more the psychological level that, 7,700. Let me get rid of that. 7,700 is where we're at and what we're looking at. So 7,700 is going to be that line in the sand of whether or not it's the bulls and bears are really going to try and defend that. I don't think it's going to act that major, but people on TV are going to be talking about that all day, so I just wanted to mention it. It lines up with the point of control, so we're going to kind of toggle back and forth on that. But again, they will say on TV, whether that's a huge coup or not. All right, we've got the E-mini S&Ps a little bit off their highs, as you can see here. We had the high today of 2934. Trying to do some math in my head, just slightly shy of 20 ticks higher than this. That can be made up in a matter of minutes, but something to note, yesterday we did come down, test that point of control, came down, got comfortable. I don't imagine we break too far out of these ranges, that I've talked about with the Fibonacci's. That's going to be something to keep a close eye on because the trade talks come in bearish, we kind of sell off towards that Fibonacci, and then when they say that the trade talks are doing well, we start rallying again. But again, I think that we're going to kind of stay in this area between these two fibs at least for a week or so, until we start getting maybe more economic data, or the earnings season. Next week is going to start ramping it up for sure. The next basically 5 to 7 days, we're going to start seeing more and more earnings coming out. I'll be playing those as I've lightened up my portfolio ahead of that, so that we can get involved. Now here's where we're talking about overnight. Pretty bearish, continuing that bearishness off of, you know, the China walking away from the table, a lot of that NBA stuff, and how China was reacting to a tweet out of, I think it was the Hornets. Not that that is going to be a major economic driver for the United States. The NBA isn't going to create that much economic drive here or in China, but it's just that overarching theme of China being not too happy with the United States. Could that affect the trade talks and things of that nature? I think there's basically separate issues, but one could easily imagine that, you know, the tensions between China and this is just another thorn in the side, causing more tensions. But then once the information started coming out, or the rumors started coming out that China was very interested in establishing talks with the United States on these tariffs, that the market started rallying. Like I said, we're off the highs, but near the highs of the day session right now. So again, I haven't added anything or taken anything off today. I am still looking at gold to take off that trade that I've been having a working order that's just slightly better than 50% of my max profit on that. Today with the gold move, it's a little bit further away from that. If you guys remember, I have on the November 34 puts in there, and I originally sold those for 65 cents. I'm working a 30-cent bid, which is just slightly better than that 50% of max profit. I got really close yesterday, but it got a little bit further away. Right now it's trading around 42, so not quite that close unless we get a bounce higher in gold. I'm not going to be able to get out of that for a couple of days really yet. All right, so that's all I got for you guys. Tomorrow's webinar is going to be a really good one. We're talking about bearish assumptions, right? So what we do is, if you had a bearish assumption, say in the mini S&Ps or whoever it is, maybe it's XYZ, you know, it doesn't matter what stock it is, but we have a bearish assumption in it. What is the best strategy for that assumption? Well, there's a lot of things that go into it. It's not just about knowing how to build that strategy. It's knowing how to implement the strategy in the right environment, in the right way, okay? So check that video out. We're gonna be doing that live. I love the back and forth. You know, I ask for questions, or I let you guys answer or ask questions. You can even answer questions if you want to throughout that webinar, so that we're all clear of concept before moving forward. It makes it a little bit more fun and interesting. So check that out at Pro Trader Strategies. Also follow us on Facebook at Pro Trader Strategies. We get a lot of content pushed out onto Facebook, and love to have you guys take part in that. All right, so if you can't take that, take it easy.